post-Thanksgiving Cyber Monday extravaganza. Ryan Ray alongside the good doctor herself, Dr. Ellen Wald. How you doing, Miss Wald?
I am doing great. I'm also testing out my brand new ring light, which you can kind of see reflected in my glasses, but otherwise it's pretty cool. I can't believe it took me this long to get on the lighting train.
Well, now you're there. So you have
I'm
everything you
welding.
need in life. A lot of
Yeah.
people were little last Thursday, but that's a story for a different day. Hope you guys had a good Thanksgiving over in Florida. Everything
Oh
good weather,
yeah,
good Thanksgiving.
it's all good,
Yeah,
all good.
not too bad here in the great state of Texas. So
Did you
okay.
deep fry a turkey? I'm like kind of
So
no, okay.
we went to someone's
I'm kind
house.
of
They baked.
transfixed by people who do that.
Yeah, we went to someone's house. They did the baking turkey deal, and they did the slow bake, like 8 to 10 hour thing. It was really good. It was really good. It wasn't a fried turkey. Fried turkey is the cream de la creme, but for the world of baked turkeys, it was very good, very good. And
All
so
right.
that's what we had. But it's got me craving fried turkey now because I didn't get one. So
Well, I
is that
hear there's a
popular in
holiday
Jacksonville?
coming up.
Frying?
Fried turkey?
There is.
I'm guessing it is because they're always selling, the things in the supermarket. But I'm kind of just intrigued by the whole process. Like you do it outside, and the whole like very slow, like lowering the turkey into the. I'm not so into fried foods, but it's interesting to watch. I
Yeah,
watched a
it's
bunch
not
of
it's not
people doing a
fried like
video.
a fried food.
Yeah.
Yeah, it doesn't have that
So
fried batter taste or anything like that. So it's extremely moist. It's you've never had a moist turkey until you've had a fried turkey. It's really good, and so you can inject them with stuff. So, anyways, okay, let's get to it. Let's see here. We have a test going on here at 1:30. Oil price slumps on fear of new COVID-19 restrictions after it rose on news of SPR releases. So
yeah.
the SPR comes out, the price goes up. Then the Omnicore tone, whatever variant, and it goes down. And I haven't looked at it this
Yeah. What are we
afternoon. It was at
calling this
71
thing?
WTI this morning. That's at
It's either like
$70 right
a
now. Wow. Okay.
yeah.
The Omni something, right?
Omicron, Omicron, which I
Omicron.
think is also the
Omicron.
name of a
Yeah.
transformer.
It sounds very much like a transformer. Very much
Yeah.
like a transformer. So,
Anyway, yeah, Friday was
oil down.
wild.
I did see. I know. I did see before we got on the podcast the Biden administration saying that they're not expecting to make travel changes or lockdowns or shutdowns or whatever. So if that holds, that's good for prices. But other nations are shutting down or blocking down or imposing various
Travel.
levels of restrictions.
Yeah. Japan was like, we are closed to all foreigners. And Israel's like, we are closed. I mean, that's like not insignificant. I mean, this is why like how long is this kind of thing sustainable? How long can people go, you know, with this idea that like at a moment's notice these countries can be like, oh, sorry, we're shut down. You can't enter. And for South Africa and these other African countries, people were literally like on airplanes, landed in the Netherlands, and they wouldn't let them off the plane. And that's just like who wants to take that chance? It just seems like this is so bad for global business and global living that uh, you just can't. You just like it's like you're rolling a it's like you're rolling dice if you want to try to travel anywhere, and then you get there and you don't know there was a news where some couple that was quarantined in a hotel in the Netherlands, and then they got arrested because they were trying to quote escape and get on a flight to Spain or something like that. I mean, this is like you can end up somewhere, you can end up quarantined for God knows how long, and for nothing that you did other than some country made an announcement that was totally blown out of proportion. So,
Right. And the concern would be is that not only the country that you're going to, but the in between. Like, you land somewhere and you're not going there, but you can't get off the plane. You gotta get sent back or quarantined there, and you
yeah.
have no business there. You're just, it's just your layover. And so, yeah, because looking, I was almost gonna go to the Ivory Coast, the week before Thanksgiving. So I was trying to figure out, how to get there, and I think you go direct from New York to Togo and Togo to Ivory Coast, anyways. And so, but you start thinking about, okay, we go through Europe or one of these nations, and they have some kind of lockdown. It's it's going to be concerning. And so, as this comes back up, we were just talking last month, maybe, that the international demand for jet fuel is supposed to come back. Which would put us past 100 million barrels a day, and so all of this will hurt demand.
Yeah. And then, I mean, we have the markets going wild. I mean, like, it was just like, oil was just dropping like a stone. I mean, it was like 1%, 2%, 8%, 12% down. I mean, and I get why, and like everyone just kind of jumped on the bandwagon. But, it's like a shock. I don't know. It's kind of it's like a whiplash almost. That really the kind of oil market. I mean, okay, I get it's good for, like, movement is good for markets because traders don't really make money unless prices move. And oil prices were very stable, last summer for a while. Not this past summer, the summer before. They were quite stable. So, I can see that, and I can see why there's an incentive to, move the market, and not just oil markets and commodity markets, but also, stock markets. But, I mean, this was like, it seemed excessive to me. Particularly, like,
Yeah,
based
it was
on
it was an interesting
nothing.
Right. Well, you have Black Friday, which is kind of, the big U.S. holiday. I guess it's not really a big shopping day anywhere else in the world, but in the U.S. And so,
Well, other countries like to have Black Friday sales.
yeah,
I've
and
seen Black Friday sales in Saudi Arabia.
what you cut out there? What's that?
I said I've seen Black Friday sales like in Saudi Arabia.
Oh,
Not
okay.
Thanksgiving, but they got Black Friday sales in the malls. So it's like,
Hey,
I think other countries use it as an excuse to have like sales.
whatever works, right? Getting people at the house and doing something. Okay.
Yeah.
Let's see here. That's kind of some more on that. Germany says it's working with the U.S. on a Nord Stream 2 deal. This feels like one of those U.S. pipelines we're always going to talk about. Like, are we ever going to not talk about the Nord Stream 2?
Yeah, this was kind of interesting. So I actually did a little bit of digging into this story a little bit because it was kind of interesting. So apparently, Axios got a hold of some like classified or maybe classified documents having to do with what's going on with the Nord Stream pipeline, because first there were like these sanctions and there were not these sanctions, and that's completely outside of the fact that, remember, the EU doesn't want to let Nord Stream, the company, operate the pipeline because they say that the owner of the pipeline and the operator of the pipeline be different companies. So then Nord Stream set up like a separate company in Switzerland called something that I don't remember to try to be like, okay, this is our separate company, and it was like, yeah, it's not really separate, so we're not approving it because they don't want, like, they want other like natural gas providers to be able to use the pipeline. So this is an issue that is aside from this EU regulatory issue that's going on. This has to do with the U.S. and Germany. So so one of the interesting things that was going on is that I'm trying to find. I like looked into this. So apparently, the obviously big concern here is that Russia will control even more of the EU's natural gas market, and apparently they're concerned about Russian aggression against the Ukraine, which is apparently heating up again. I don't know. There was something about it on CNN this morning when I was working out.
Mm-hmm.
So this document that Axios claims to have gotten its hands on outlines measures that Germany is trying to reassure the U.S. that it will take against Russia if there's some kind of like aggression against the Ukraine, because they're concerned that they won't do anything because they're being because Russia controls all of their natural gas, and Germany's super dependent on Russian natural gas. So here's what they suggested to the U.S. Okay, ready for this? that
I'm
Germany
ready.
will take. This is what Germany will take in the case of Russian aggression against the Ukraine. It includes strong public messages condemning Russia's behavior and
Oh yes,
assessing the suspension of political meetings.
we know that Putin.
Strong
He
public
is.
messages.
Anytime you say anything like Putin, if he hears this podcast, he might curl up and cry because we're making jokes about him, and so he is such a softie that it's not surprising that that's what they're pointing towards. Can we just? I've said this before. Can we just say that this is all nonsense? Like at some point, can we just agree that no one's afraid of Russia and that Russia is not really a threat? Because if this is what you're proposing to do, then who cares? I mean, strong, Ellen. I strongly will denounce your take on Nord Stream 2, and I will counsel potentially future podcasts there. I've shown you.
And we will
It's a
say
joke.
this in public meetings, like at the G20 UN. Like Putin gives anything about that. Like that's like, I mean, Putin is like laughing.
Yeah. I don't.
I mean, maybe there's more in
It,
that document Axios decided not to report, but I was not impressed.
well, this was the thing going back to the Trump administration that Trump was right about was this whole NATO deal, funding this, needing the troops, paying the bills, and all this stuff, and all of that turned out to be, I say all of it, a lot of it turned to be correct, which is this is just political posturing. No one's really scared of Russia. If you think that telling Putin he's going to do something publicly, he's he's president or whatever they call him for life, right? Right.
Yeah, I think so.
So strongly condemning him at the G7. What's that going to do? What does anybody think it's going to do? No one thinks it's going to do anything. And I don't know
Also,
why these things
yeah,
are even considered serious. Like this isn't even a serious talking point. This isn't like your mom getting in front of the school and you're in fourth grade and telling everyone that you wet the bed last night, and like it's gonna ruin your credibility with all your friends. Like this isn't that. This is something that no one cares about. Like Putin doesn't care.
yeah. Oh, you want to know what else is in the document? Germany
What?
and the U.S. will support investments aiming at $1 billion via the Green Fund for Ukraine,
Oh, I'm sure.
including
I'm
from
sure.
third state and private sector entities. Germany will provide an initial grant to the fund of at least $175 million.
There you go. It always comes back to money. Okay.
But what do
All
we
right. Let's
think?
see
Do we think
here.
Nord Stream 2 is going to get? Are they going to get it online in time to alleviate any of this, energy crisis in Europe, or is it just mired in bureaucratic crap?
It's so much posturing. It's so much posturing. It's just it's hard to take the whole thing serious anymore. Like you look at these pipelines in the U.S. and you realize that that's all posturing, right? It's the Army Corps of Engineers and some federal judge, and then the judge, and then the Obama administration, the Trump administration, the Biden administration. It's all just you can just see it's just people posturing to whatever they want. The same thing here, except for here we have the big bad Russians, and so you don't hear people. Okay, I don't know about what's going on over there, but no one over here is like, well, it's a threat to environmental safety. We can't have it because it's an environmental problem. I mean, I don't think the Biden administration is or anyone in the U.S. is wanting to reject it because of that, right?
Good point. Yeah, I don't think so. I
It's
mean,
just
haven't
weird how
heard.
that
I
works.
mean,
Pipelines in other countries are safe. Russian pipelines are really safe.
yeah. Maybe we should go get Nord Stream to come build pipelines in our country because they're so safe.
But it's so yeah, it's so much posturing. Yeah, it gets done. When I don't know. Um, at this point, I don't. I have no idea. But it's laughable that people are talking about this like it's serious anymore. Like it's not. This is not a serious discussion anymore. This is something we should all. This should be like an SNL skit. If SNL actually did comedy and they actually did political satire, this should be an SNL skit.
Yeah.
Okay, let's see here. The Saudi oil minister not worried about the new COVID variant. Okay.
Yeah, one thing apparently Russia and Saudi are not worried about is Omicron. Both of them, like, we are
Omicron.
not worried about this. Russia, I think what was it? I said something. Russia was like, Russia was basically like, yeah. The Kremlin says market reaction to Omicron COVID strain is emotional and not based on scientific data because there isn't any data yet. Like, wow, that is very measured and wise and calm coming from Russia. Factual. Yeah,
and factual. Factual.
Yeah.
It's really factual.
Yeah. Meanwhile, so
Weird that
the
works.
article is kind
So,
of interesting because he didn't technically say that he wasn't
but
worried
hold
about
on,
the new variant. Yeah.
Mm-hmm. I got a question because this
Yeah.
little flashback, little PTSD. The last time the Russians and the Saudis weren't worried about COVID, they had the price war, and then we shut down the world. So, is this a precursor? Is this how they do it? They're like, yeah, we're not worried, and then we shut down like a week later because
You're right. You're right.
I just got a little bit of PTSD. Okay.
A little bit there, yeah. Last time but that was they were meeting in Vienna and scanning everyone's forehead, see if they had a fever.
That's true.
No one's meeting in Vienna anymore.
No one's
all right,
okay.
All right. So you're right. Let's take a deep breath. Yeah. So what are they worried about? If they're not worried about Omicron, apparently they are interested in supply pushback from key consumer nations and potential seasonal stock builds in the first quarter.
Which is interesting because we talked about Big Oren. I mentioned Big Oren, and someone said to mention him. I mentioned him on the podcast last week. Anyways, Big Oren, I think, was talking about on Twitter that he thinks there might be a slight some sort of build going into 2022.
Well, yeah, I mean OPEC's been saying that for a while, and that's what Barkindo was saying at the ADIPEC meeting. He was saying that they were already seeing like stocks starting to build past 6 weeks, and I think someone, may have been Samir, commented that if oil prices are going down, then China may start buying again and building up its stocks. So, I think it's probably likely that. I mean, I've been saying for a while that whatever. So there's going to be a BTC Joint Technical Committee report on Wednesday before the OPEC meeting, and I think that if they don't always say what's in the report, but if they do give some indication of what's in the report, I think that'll be a good indication of what OPEC is thinking and where they may go in terms of whether they'll pause their 400,000 barrel a day increases, because if they're too concerned about stock splitting, they might pause it. Now, if they do pause it, what does that look like for Biden? Like, does that make him a winner, or does that mean that there's some sort of they're going to call it like a supply war?
A supply war.
I've heard someone right after the SPR, the intention to the SPR release, I had someone email me and be like, "What are your thoughts on the supply war between the U.S. and Saudi Arabia?" I was like, "What supply war? Oh, we're talking about the SPR release. Yeah, not a supply war, but people are calling it a supply war."
Well, they're always looking for, some kind of way to sensationalize things. Okay, so if the Saudis roll back and Biden released the 50 million barrels, that's the premise here. Is it a win for Biden? I think right now the world leaders, like the way they win or lose is really based upon how they're going to respond to this next variant, right? So this doesn't get covered a lot in the mainstream media or the corporate press or whatever you call them. But if you look around, there's a lot of frustration with the lockdowns, the passports, the restrictions, and all this stuff. And so if they're sitting there and they really put a squeeze on the economy the next 2 or 3 months, I don't think gas prices will matter. I think you just have so many people that are so mad that, $2 gas or whatever really doesn't make a difference anymore.
Yeah. Well, if they can't go.
What's that?
If they can't go anywhere, then yeah, what does it matter what gasoline is?
Yeah, that's what I'm saying. But do we think that rigs are going to come online, not in mass, but a decent amount next year? I think that there's some of the private equity groups back will put some more on, but publicly got credit guys, probably not, right? So
Yeah, well, I don't know. I thought
you
Chevron
need
and
the demand to be curtailed.
yeah, I thought Chevron and some of the other really big ones said they were at least going to put money in to shale production. I don't know if that means like more rigs or just replacement level, but I thought that they did say that they might be putting more money in. Um, but
Well, that would be like the perfect storm, right? You have a bunch of shutdowns. You have
yeah,
U.S. rigs going online. OPEC won't cut, and we go back to like negative oil again. And we won't go to negative oil, but we go down like $20 oil again. That would be
but you also
the perfect storm.
yeah, I mean you also have this situation where where you've got I mean, we've still got relatively high gasoline prices right now. You've got this SPR release that's like yes, an SPR. Remember, it's like not totally an SPR. They're gonna have to pay, give it back or produce an equivalent, barrels to put back in. And then you have things like you have so much contradictory signals coming out of the administration. You've got, Amos Hochstein going on TV saying, "Oh, well, we could do another SPR release," and then you have the Biden admin saying, "Well, it's not on the table right now," and then you have the Biden administration saying, no more lockdowns. We don't see a need for more lockdowns. And then you have them saying, well, on Thursday, we're going to release our strategy for like how to defeat COVID this winter. And you're like, okay, well, what's going to be on the strategy? So that there's so many conflicting messages here. I mean, you have the UK being like travel bans and mandatory quarantines. And they're like, well, if it's not any more dangerous than Delta, then we'll like walk it back. And you're like, okay, but make up your mind. It's like I feel like I'm one of those like businesses waiting for the regulators to decide what they want so that I can just like make plans. You just want to know.
You're trying to decide if you're essential or not. Okay. All right.
Yeah.
I see here. I think our guest is here. Can you hear us?
I can. Thanks so much for having me. Can you hear me?
Yeah, you sound loud and clear. Why don't you give yourself a quick introduction for everyone? That way you do it better than me.
Perfect. Well, thanks so much for having me, Ryan and Ellen. My name is Rory Johnston. I am a Toronto-based commodities analyst. I spent a long while covering commodities, leading commodities coverage in Scotiabank Economics up here in Toronto. I kind of look at broad commodities across the spectrum, but my kind of specialty is energy and in particular kind of oil and gas. I now am working at a family investment office called Price Street in Toronto. We deal in public and private markets. And then on the side, I'm also starting my own research outfit called Commodity Context. You can currently find a newsletter version of Commodity Context on Substack. If you want to click through to my Twitter page or whatever, and you can kind of find it there. But what the deal with Commodity Context is it's attempting to be, at least at this stage, a free newsletter that is less newslettery and more kind of research periodical-y. It's very similar to the type of work I used to do at Scotia Economics, longer form, kind of data-driven and visual and chart-driven, attempting to kind of answer and talk about things that analysts that are very in the space kind of look at, but in a way that's a bit more approachable because we've all read the kind of sell side research reports, and they can be quite dense, quite long, and definitely not the most approachable things for the general public, general investing public even. And I believe particularly as we kind of enter through, we're recovering from COVID, we're going down all of these energy transition conversations, and I think that kind of we always talk about, a lack of energy knowledge, and my hope is to try and, broach that divide in my own little way.
Okay, well, let's start with the oil market then. Ellen and I were just talking. Where is the market? There might be there's talk maybe from OPEC about things maybe slightly oversupplied in 2022. Of course, we got high prices. Where are we at? We oversupplied, undersupplied, just right? What's going on?
I mean, I think it's, as of right now, and I think even as of last week, I think the likely outcome is that we are slightly undersupplied in the market on a longer term basis. But obviously I think we've all read about, various indicators in the physical market that make it seem like perhaps it's not actually as tight as it seems. And I think we could talk about a bunch of different ways to square that circle. I think that's one of the things I'm trying to, tackle those types of questions at Commodity Context. But I do think, for instance, that we obviously have exceptionally backwardated forward curves. You have a tremendous amount of inventory flowing out of commercial storage tanks around the world. I do believe in many ways we're in a situation where you're likely having those inventories flowed at such a pace where you're competing with, call it virgin production, where it's coming straight from fields of the market. Whereas normally you'd have a market where the physical drags the financial along, because that's where the first kind of signals of weakness are. I know, and there, obviously the physical financial debates on Twitter are quite heated. But my view right now, and I think no one really knows what's going on, but my read is that we likely have a situation where the financial markets are leading the physical slightly, which can obviously create lots of potential for kind of massive drop downs like we saw on Friday. But I do think overall, what I found very interesting about that collapse in prices on Friday was that we're actually kind of already in a speculative liquidation cycle that net spec positioning as recorded by the Commitments of Traders reports actually hit a peak, or at least a cyclical peak, back at the end of October, when prices basically started range trading down and kind of to the side. We had already eroded those positions that on a net basis back down to the low point of August. So I would have actually said, if you had asked me midweek, are we particularly prone to a very disruptive drop to the downside because of potential skittish speculative money in this space, I would have said no. I would have said that we are actually much less vulnerable to that than we had been a month and a half ago. But obviously, combine the fact with thin holiday trading and everything else, and obviously empirically it happened. And there is still a lot of kind of speculative sentiment in the market, but I think rewinding to kind of comparable periods in the past, it actually wasn't that high. So it actually kind of surprised me a bit, to be honest.
Real quick, Ellen, I won't jump here, but I just want to thank you for taking a shot at Big Horn on the physical versus paper. That was good. I caught that. You slipped in there. It was a big shot at Big Horn. Listen, we're pro shots at Big Horn on this podcast, so thank you for taking a shot at him. So I called it. I wanted you to know I caught the shot at him, but go ahead.
All right. Well, and I think here's the thing. I think a lot of people kind of look at the physical argument and say, oh, look, they don't know what's going on. And I disagree. I think they obviously know what's going on. They can see these, programs clearing slower than usual. They can see all the real kind of operations that are happening on the ground. I think, in many, they're the closest people to those physical barrels. So I think that there's a tremendous amount of intelligence and kind of wisdom there. But I think the question is, how do you square that with financial backwardation, OECD stocks drawing down quickly, SPRs drawing, and everything else? How do you square all of that together? And I think it's not that common that you see markets structured like this. And that's why I think it's a little bit of a detective game. And I mean, frankly, we won't probably have the data we'll need to really answer that question for a while longer, based on the way that this market kind of is recorded, probably another year or so. But I think that my explanation of how you have inventory drawdowns competing with, again, I'll call it virgin production. I think that can basically say, look, financial markets think we're tight for whatever reason, whether or not that you have extra money in for inflation hedging or whatever else. Manifesting, you have very, very tight spot markets, which are facilitating and prompting a drawdown in inventories. But then you also have slow clearance in physical. So that's why I think it's very interesting about this particular moment is you have to kind of square both of those sides at once to make sense of the market to say where we're going from here. Because those physical signals have been weak or flashing weak, basically from $40 up to 85. So I think the challenge is how do you square that? And this is my attempt in the short term anyways.
So what do you think OPEC is going to do with all this? Because one of the things we've just talked about was how OPEC is very much concerned with stocks and stock building or stock drawdowns, and are we seeing stocks beginning to draw? How do you think they are going to see this? Because that might give us an indication of what they plan to do this week.
Yeah, and I mean, obviously, Alan, you know the Saudis kind of much better than I do in terms of their strategic priorities, but I've always personally viewed OPEC and by extent, as an extension of Saudi policy in many ways. And I see Saudi Arabia's primary concern as being a prioritization of long-term demand, long-term prices. They've always been a price dove within OPEC on a relative basis. I see, the way that I make sense of them in many ways wanting higher prices now is, and I just wrote on this, my last piece was on this, which is basically, we're hearing, and you guys were mentioning earlier, that a lot of the forecasters are seeing oversupplied markets in 2022. But that's counting on like 1 million barrels a day of growth from the U.S. shale patch. And right now, we're still down 1.5 million barrels of crude from pre-COVID production levels, from 13 down to, we would drop down to 11, and now we're back up to about 11.5. So we've only clawed back a quarter of that drawdown, despite the fact that prices are, we spent a month on a WTI basis above $80. In the past, when we saw, let's say 2018, when prices went that high, we saw U.S. crude production grow by 2 million barrels a day that year. So I think there's this challenge right now of we all got so anchored for so long to this conception of this, that $40 to $60 shale band, whereby if you spend any period of time above $60, well, you're just going to absolutely swamp the market in crude. It's not happening this time, at least not yet. And I think the next piece I'm writing, hopefully going to be out tomorrow, is on this kind of question and trying to disaggregate what's going on in the U.S. shale patch and say, like, why isn't production growing more quickly? And not only is it not growing more quickly, you're also seeing production being, by and large subsidized by the drawdown in DUCs, which you guys know well about. But I think it's this challenge of, sure, you've seen some kind of regain, bounce back in the rig count. Certainly the remaining rigs and the rigs, currently on a rig weighted basis are higher efficiency now than they were, let's say, at the beginning of COVID, because you have your best crews, targeting your best acreage, et cetera, and another 2 years plus of learning. So the productivity is high, but not as high as the current kind of production rates actually kind of hint at. So I think there's this, my view on OPEC is they think we need oil, or particularly Saudi Arabia thinks we need higher prices right now to test the sensitivity of shale, because if we don't get 1 million plus barrels a day of US production growth next year, well, then it's not an oversupply market. It's actually a deeply, deeply kind of undersupplied market. And that's if nothing else goes wrong and OPEC Plus returns every barrel of crude they've promised and. So I think everyone's a bit worried that we're actually not going to have enough crude. And I think, people will say, sure, Saudi wants higher prices. I think that's probably in a sense true, but they don't want, deleteriously higher prices that accelerate demand destruction and accelerate peak demand, et cetera, et cetera. So I think I see them as kind of saying, look, we don't want prices, crazy high, but we can't have them crazy low right now, because otherwise we're not going to get any U.S. shale response. So to answer your question, what are they going to do? I mean, it's OPEC's more of an aircraft carrier, or OPEC Plus in particular is more of an aircraft carrier trying to turn than it is like a nimble speedboat. So I would say baseline, even with the SPR release, I would have said they're not going to change anything. They're going to keep 400,000 barrels a day. They're going to keep it because it's just not worth the headache of renegotiating what that looks like. Even a pause, you're already seeing Russia push back on a pause. You're seeing lots of people saying, no. So I would still say that my bias is that they are going to maintain, I keep saying stick to the plan. And I think they spent so much effort constructing this forward guidance. I would like to think that they're going to kind of stick with that plan, but obviously Black Friday, changed that calculus considerably, which is why they've pushed back these meetings to see if markets bounce back considerably this week. And so far, at least, we're seeing a bit of that bounce back. So, fast forward to the end of the week, my bias right now is still that we see a continuation of current policy, but that does presume some continued retracement of that oil price fallback.
I love that that analogy that OPEC Plus is like trying to turn an aircraft carrier, and it's
I've spent
Yeah, they try to get more nimble by having these monthly meetings, but it's still like trying to turn an aircraft carrier. So so that's really interesting. I think it's a very good point. Someone commented, I think I saw, they said J.P. Morgan actually doesn't think that OPEC Plus can really, that I guess as a group, that they can collectively actually increase production by 400,000 barrels per day anyway. So sticking with the plan doesn't even necessarily mean that amount of oil is going to get put back on market. I don't know if you saw that.
And I think I saw the little clip of I was watching it live on Bloomberg and saw him talking. And there's a lot of this pushback on whether or not OPEC has the spare capacity or production capacity it claims to. Obviously, we've seen production challenges, particularly in West African members, Nigeria, Angola. But as of yet, I haven't seen evidence that they can't continue increasing production, at least for a couple more months, along that kind of previously agreed line. Are some of the producers going to reach the level that they claim they will? Even Russia? Probably not. Like some of these baselines are inflated. I think we can all agree on that. But I at least haven't seen evidence yet that they can't keep up with that pace. We've seen, again, those West African producers fall back, but Saudis kind of continue to kind of plug along. As a group overall, they're still trending along that 400,000 barrel a day, easing in additions back into the market. So I'm not that worried about it yet, but even if that is true, that even more, that makes more acute my first point about they need prices high now. Otherwise, you're not going to have any non-OPEC plus production support in 2022. And again, I mean, it's the same JP Morgan comment, they were saying that they won't see any production or any demand destruction from high prices until $130 a barrel or higher. So, I mean, prices are going to go high in 2022, 2023 if we don't get U.S. shale bouncing back in a material way right now. And I think that's even more true if there's any kind of issues with OPEC plus production capacity.
Switch gears and talk about natural gas now, because we're seeing some interesting divergence between U.S. natural gas markets and European natural gas markets, with U.S. prices trending downwards, but in Europe we're seeing them go up. What's your read on that?
Yeah, I mean, obviously the big challenge for, I'd written earlier about trying to explain why U.S. natural gas prices were rising in the first place. Because inventory-wise, if you just look at it on a nominal molecule basis, it doesn't actually seem like there were that undersupplied in North America. But I think what becomes revealing is that LNG exports are such a massive change over the past 5 years. You went from basically 0 to 10+% of the overall nat gas supply market being exported. That increases the overall demand. So on a kind of demand days, a demand or an outflow kind of adjusted basis, those inventories look a bit more precarious. But I do think the way I viewed LNG exports initially was they were essentially a mildly flexible source of demand that, you would sop up all this extra gas. It would provide that price impetus for more production in North America, which would actually increase North American energy security on a long-term basis. And if you ever had some kind of massively cold winter that spiked our prices, you would eventually reach a point whereby the arbitrage of LNG exports would short circuit, and you would basically turn off at least some portion of the demand, 25, 30% of that kind of export demand, which would allow the market to kind of regain itself. That won't happen now because obviously LNG prices globally are 6 times what Henry Hub is. So you could very literally get a 4 or 5-fold increase in Henry Hub, and you wouldn't really erode those LNG export margins. So I think at this point, you're kind of all of a sudden factoring in for that entire kind of bucket of LNG export capacity. And that helps explain why North American prices have been rising at all. Because I think otherwise, why are they rising when you're basically at the 5-year average for inventories? So that was the answer or the question I was trying to figure out a couple weeks back. Right now, obviously, weather looks warmer, inventory is still fine, et cetera, et cetera. When you really got into a tight situation in North America was when you had the combined push of really cold North American winter and a continued kind of massive price premium in the LNG market. And I think right now what's probably happening is that LNG market's still very, very pricey, but it looks like the North American demand side, at least at this stage, kind of looks a bit weaker. When I looked at a couple of weeks back into like how much can we glean from forecasts for temperature in January and February of this year as of right now, and the answer is kind of like 50-50, maybe a little bit better than that, but not much better than that. So I would say at this stage, North American market seems to be pricing in a warmer relative winter, while the rest of the world is obviously still extraordinarily short of gas.
Of course, New Yorkers are probably freaking out because they got snow today, and a little early for snow in New York, and so I wouldn't be surprised to see a little freak out there. But apparently in Europe, the temperatures are like absolutely freezing cold, and the situation does not look good there.
Yeah, I mean, I saw a tweet. I think it was from Javier Blas today. That was, basically, you're already at a low point seasonally for inventories, and you're seeing the beginning of heating season, a very, very, rapid drawdown in those inventories already from an already depressed base. So, again, I'm not a weather forecaster, but if that cold continues and we keep at that pace, you could very easily drop kind of near that 10% of overall capacity in Europe. Whereas it would take a lot for a similar kind of worrying about tank bottoms in North America. Like we're so far away from that at that stage that I think that's, again, why you see some of that discrepancy. About the snow, we actually got in Toronto, we got about 20-25 centimeters over the last 2 days. I think you had seen some photos. My son and I built our first snowman together. So that was a very earnest, heartwarming experience. But but no, it was very, very cold.
Let's see here. I guess we'll get ready to wrap up this. Main thing is that sweater you have on is impressive. So, like, you set the bar. The first episode with an impressive sweater.
Yeah.
If we have you back on, can you match that? I mean, it's a high standard there.
Oh, thank you. I actually picked this up in Scotland. It's a nice Scottish wool sweater. I picked it up on my honeymoon, and it's been one of my favorite things to wear ever since.
Okay, well, tell people again where they can find you.
Yeah, so on Twitter, you can find me at Rory_Johnston. You can find my newsletter and research on an ongoing basis at commoditycontext.substack.com. And right now, it's still all free. So get it while it's hot.
There we go. Okay.
Yeah,
well, this was
I
lovely
just signed up too, so you can go. The link will be in the show notes. I want to read that oil thing tomorrow. So
hopefully.
All right. Well, Rory, thank you so much, and look forward to getting you back on again in the future.
Thanks so much for having me.
Yeah, thanks for it on.
Okay, Dr. Wald, final things. Where will you be this week?
This week, let's see. So I just want to let the listener know that I had a piece. It was published, I think on Friday, actually, on the Atlantic Council's energy source blog about some things that Europe can do to alleviate its energy issues. And I will likely have another piece coming up on the New Atlanticist publication later in the week about something called the First Movers Coalition, which is a group of industries and companies within industries that are basically forming like a buyers club for low carbon products and services. And I'll be writing more about that and what's going on with that. And I think I'm going to be on NPR also discussing what OPEC may or may not be doing at its upcoming meeting. on
The
Wednesday.
aircraft carrier may or may not be. There we go. Okay.
Yeah,
All right.
I gotta
Inside the
credit them
War Room,
Rory for that.
Yep. I have on Jake Bright, the author of The Next Africa. David Blackman was on the Textual Gas podcast. I think that's it for me this week. So, with that being said, we'll be back next week, right? Yeah, next week. So, talk to everyone then. Everyone then.